Today I'm jumping into the diversified portfolio. This is one of the starter portfolios under Robot Labs in recommendations, but I'm going to be making some adjustments because I want to trade this on a micro contract portfolio, and one of the bots is meant for the natural gas contracts, which actually doesn't have a micro. So we're going to jump into it, see what we can change around, and take a look at that performance. First, a disclaimer. Futures and Forex trading contains substantial risk of loss and is not for every investor. Be sure to talk to an investment advisor before beginning trading. So this is the diversified portfolio and its performance from 2008 to 2022. This is a backtest obviously on all the mini contracts rather than the micros, which started in 2019. But one of the things that I do not want to trade is natural gas, because they don't have a mini contract, and that is what Energizer Bunny is running on, one of the portfolio bots that is included. So I'm going to see if I can make a little adjustment, maybe add one other bot to replace Energizer Bunny, and we'll take a look at that performance. Right now, what I'm comparing it against is my one micro contract performance right here. So I'm going to try to get better statistics than this $3,900 net profit per year and the $445 drawdown. Let's jump into NinjaTrader. So I'm here in NinjaTrader, and I just ran a backtest on the default settings for Energizer Bunny. And as you can see, this is on the mini contract, but it's kind of just going back and forth. I think one of the main reasons that this is included is because it's maybe non-correlated with some of the MES and MNQ contracts that are also in the portfolio. But I'm going to be looking to replace this with another exceptionally performing or very well performing bot to just see what we can do in terms of performance. So I just ran a backtest on the 4 other strategies that are in the diversified portfolio, and these are all in the micros, and this is a 2-year backtest. The reason being, the micro crude oil was created in 2021, so I only have 2 years of data to work with for this. But in this case, as an example, it's enough. And what I did in terms of backtesting is I ran them either on the default if I didn't have an optimized template available, or I ran them on the optimized template that's provided by Ninjacators in the templates area. So looking at this, we can see over the past 2 years, really nice performance over these 4 bots, $15,000 total net profit with a $1,300 max drawdown. But something I want to do is add that last bot to make up for Energizer Bunny not being there. So I am going to focus on finding a bot that is positively performing and not necessarily correlated with any of the other strategies I've had here. Now, it's called diversified portfolio because each of these instruments are different. But in my case, I'm most likely going to try to pick a non-correlated bot in the MES or MNQ that'll just add to this performance, because we have a wide selection of bots that are designed to trade on the index futures. So I'm going to take a look and see what I can add that could potentially improve this performance with the micro contracts. So what I've done is I've added the harmonicon with MNQ. So now I'm turning 2 MNQ contracts, but I want you to notice that this chaos theory MNQ moves kind of in tandem, but a little bit anti-correlated with the harmonicon version. What you can see is when this is encountering this long drawdown, this is actually performing really well. And when this is encountering a little bit of a drawdown here, chaos theory is performing well. And again, right here. So these kind of offset a little bit, and that is something that I really like in terms of adding these two together. So I'm adding these two, but I also wanted to just take a look at Iron Man and see if I can replace it with something that maybe has been performing a little better recently. So I'm going to see what I can do in terms of replacing this, but specifically I want to have some kind of gold contract on there. So I'm going to focus on the gold contract bots, and let's take a look at what that looks like. So I just replaced the previous Ironman with Eldorado, and it just has a little bit better of a performance. One thing to note with Portfolio Strategy Analyzer, this tool that I'm using right here, is sometimes there's a little bit of a drift down, and that is not necessarily indicative of the profit here. So as you can see, cumulative profit for minus 489, when in reality during this time period it was 545. So that is just something that happens occasionally with some of these, is it has this negative track for whatever reason. So you just want to make sure that you're paying attention to the actual backtest numbers as opposed to some of these kind of trends here. But what I have gotten here is $2,200 of profit and $1,200 drawdown. So a better result than the original. Now what I want to do is really just take a look at some of these values, so my max drawdown values versus my total profit, and see if I want to size up some of these contracts. So this portfolio obviously was built for a, say, single contract on each, so 5 micros, but I'm going to just mess around with this a little bit and see what I can do about improving my metrics. And the main metric I'm going to be paying attention to is $22,000 over $1,246 max drawdown. So let's see what we can do to kind of clean this up, maybe increasing some of the sizes on the lower drawdown high performance bots that we have here. So I just went through sizing, and what I did was I just doubled the sizes on the low volatility rider and Mother Gusher bots because they had such low drawdowns. I wanted to get a little more parity with the other bots that I'm trading. So after doubling those, and you can see the added contracts here, we have 30,000 max profit with a 1457 max drawdown. So we added about $200 to our max drawdown, but around $8,000 to our total net profit. And my profit per month is almost on parity with my max drawdown. So really happy with that sizing adjustment. And here is the overall equity curve. So generally ticking up, pretty safe in terms of max drawdown, and we are generating a decent amount. And this is again just off of some of the provided optimized templates and the default. So not too overfitted or anything like that, and we have quite a bit of diversity just in terms of our instruments here, as well as some of the different methods and strategies. So focusing on low correlation and diversification between instruments and equity curves, we can develop a pretty solid strategy. Hope you take a look at these portfolios and see what you can do to improve them.